Hello everybody, welcome. I am here to show you what I am seeing in the stock market charts so you can help protect your finances and secure your future. Let's go ahead and get right into it. We have a weekly chart of the S&P 500, the SPX. This white line going all the way up has really been the major trend it's been following since 2009. I just drew in this white line as really a bottom. It's really been catching all of the bottoms. We have more than 3 tags. Call it a confirmed trend. Really called the March lows. Not exactly, but it was there. But we zoom in to closer to where we are now, the March. And this is just massive uptrend. All these gaps we've created all the way up. This is why my chart looks kind of clustered. It's just this is the stock market we have created nowadays. There's just so many people in here. And it's starting to get so manipulated that things are getting out of hand. But I have to really dial into an hourly to see what is going on. And this right here was the gap down that scared everybody. The gap down, it fell, it rallied back up, and then it fell all the way down here. And the last 2 days, we've just been ramping up it. And we closed here one day, right at a gap, which, I mean, technically we filled, but closed down below it and gapped it again. And here we are, just this massive, this was 1 hour, we just ramped all the way up. Really took all of our energy because we went sideways. If you see the momentum, we went all the way up, and we didn't quite fill this gap, but it's like $1 there. You can call it filled, but I really see it as a strong support line right here at 47. And then this is the gap down it created, or gap up created one day, and that was your top over here at 37.80. But these are all going to be strong resistance lines that we're going to have to get through to be able to create this blow off the top that I really suspect is going to happen. They're not going to pull the market out right here when there can be more money to be made in my eyes. So I really do I really do see us even gapping over this. Maybe not today. After the close today, we went up, we tried to fill this gap, and we lost momentum. The MACD's starting to cross over, so the 50 moving average and the 100 moving average, these are still down here. The only thing that I think brought our price action up here was the 20, just cutting through all of them. The 200, the 50, the 100. Well, I think now we're starting to roll over, and when we come contact with that 20, there's really nothing else to keep us up. So I suspect a back test of this just to continue forward after this 1 hour rampage. You can't go up forever, so can't go up forever without the rubber band effect happening eventually. That is the quick breakdown on the S&P that I have. This is the SPY, kind of the same thing. This was a confluent bottom, but again, here we are. The same thing. Kind of filled the gap, kind of didn't. Losing momentum. PPO looks like it, or MACD's about to come back down. Again, your moving averages is the only thing that's really keeping us up. So if we gap up tomorrow, I would expect a gap and go, because we need this blow off the top for a bigger crash to really happen, to bring in the most money we switch over to the triple Qs real quick, I have a bottom trend line, a really top trend line that we were following on our first recovery, broke it, started to create this bottom one, tag, kind of missed, tag, 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 tag. As we've been tagging, we created this middle line. Okay. Well, let's get a little bit closer. That's all we're doing is bouncing in between this median line and this bottom trend. We got a gap here. This would have been the same as the gap created from the S&P. So we can go ahead and put that there, just like that one. Wasn't as a flightful day as it was as the SPY. I recall hearing someone saying they don't know how the Qs went up, but I mean, if you really want to look at it, 2 out of the 5 or 6 FANG stocks, the tech stocks, whatever stocks are keeping these up, didn't do all that well. Your big tech stocks don't do well. Your triple Qs aren't going to do well. Triple Qs with the 50 coming towards this, it really looks like it's coming down for a back test of this line. If the Qs does it, SPY's going to do it as well. That's what we're headed towards. I'd look at this trend tomorrow, 320, 317, 318. If we go down towards the bottom, that'd be good levels for you guys to look for. Remember, always buy high, or buy low, sell high. You only buy high if you're shorting. Then you short high and cover low. Always risk management. Make sure it's a good size of your portfolio, and you're not taking any big losses. Yeah, you want to win big, but if it goes in the wrong direction, even $1 or $2, that ends up being a big loss when you could have not taken the trade in the first place or waited and got out at a better level. Alright, this is the IWM Russell 2000. This is probably the hardest one out of the 3 to even get a trend line on, but this is really what I got. I mean, it comes right here, they crossed over. This was just a bad time for the small caps. I think tech was really leading the way here, and then they crashed, and this right here is the ramp that everyone's been talking about. How the small caps are outperforming everyone and whatnot. But, I mean, here we are. Long term, we've just been in this channel. This white channel probably goes all the way back to the 2009, or 2009, and this is actually 2001. This is a trend line. This is why I can see how we're all the way up here, even well past this. These trend lines is really the bottom of our trend. We close in March lows up. Alright, everybody. I am sorry about that. I don't exactly remember where I was at. My daughter came in the room and needed something. The IWM, the March lows. Yeah, this is really a hard trend line to get by, but long story short, these white lines is our long-term trend lines. And to be honest, here we are, far extended above them. Bouncing in between these 2 trend lines that we've gotten. We came up, we tested all 3 of these really at the same time. Rode them up, back tested it, broke out, back test, and we've just been riding on top of it since. Broke, tried to go down, caught back up. This was probably your panic day for everybody. Caught back up in between these 2 lines, and now here we sit. we've been losing momentum. This was a hell of a divergent high. If you guys would have been watching that one, that would have been a definite sign to get out. Like, yes, we can burn through these for a while. It could have kept going down. The price could have been all the way up here at 222, and then it broke instead of at 216. But the whole time, if you would have been watching that, would you have wanted your money in that position? That's really the way I look at it. So, alright, here we are. Yeah, we're losing momentum. This is starting to kick. It could cross over, and we could continue higher. Not really getting that many signals on the daily. That was even on the daily, you guys. So, if we go in the hourly, here's your hourly divergence that went on for days. That was probably the same thing as your daily. The MACD it's not necessarily crossing over. This right here wasn't a divergent high. It's actually confirming your uptrend. So I guess we got 2 out of the 3 confirming uptrends. Q doesn't look like it, as the SPY and the Russell 2000 does. But try to keep that short. Watch these lines. About 215 is the high, and 210 is the low. 216 is the high. 215. 210 is the low. You get what I'm saying. The moving averages are doing the same thing as the SPY. Yes, they're going up, but it's only doing it because the 20s are smacking all these lines, you know, just making everybody think it's going up. These 50, these are just starting to go out this way, and this one's starting to go out this way, so that's not a bullish sign. If we get rejected, we're just coming back down to here. I don't see us coming down to hit the 200. That was everyone's call sign here. That's what got them there. This is really a good moving average one. Catch your divergences, looking at the moving averages, you know where it's going to go. Alright, moving on. Gold. Gold, I've been hearing a talk out of breakout on gold. I think that was like right here, and I only think people were talking about it because it's on the top of this trend, and it was kind of at the same time the short squeeze of silver. Short squeeze of silver. I'll get back to it. Let's do gold real quick. Long term gold, we just been following down this trend ever since. I'll even show you the monthly where I get this white line. This is really 1972 is when we strayed away from the gold-silver standard, and ever since the manipulation has started, as you can see. We got January of 1915, and just, you know, average prices. We could zoom in on them. There's probably a couple big ones in there, even during the crash, but you guys see the prices really don't start to fluctuate until we strayed away from that gold-silver standard. I'll leave it at that because there's a lot of speculation around that one, but gold is a good hedge. Yes, it is on a uptrend and always has been. This may not be the exact line, but this is a monthly chart all the way back from 1972. Yeah, it's a good commodity to go in, but during our last Great Depression, was it 1932, 1933, might have even been 34, a couple years after people were already struggling, they wanted to confiscate everybody's gold. And everybody was just alright with it, you know, like, you confiscate this gold, or at the time you went to jail for 10 years. That's almost probably a life sentence nowadays. I mean, again, this is just my opinion, but let's say the market crashes and everybody buys gold. They don't do it this year, but next year they want to confiscate everybody's gold to deal with our economy that is propped up to look good, but really isn't, and gold looks like it's just going crazy right now, okay? As we're talking about it. But if we go back long story short, I see gold coming all the way down to 1500. 1500, even lower for me to even want to buy it. You know, like it down here 1,000. I don't think it's gonna get back down to 1,000. But 1500, absolutely, and I'll buy it then. Right now, it's just this is the time period we're in. We had a top at 2,000, and you know we really didn't fall until 1,500 broke. And we fell all the way down to 1,000. We had a top of 2,000. And we're probably not going to have a fall until 1,700. And then we go all the way down to 15, 13. Again, that's just my opinion. If the 200 is going to be up here, we'll be over here. 1,300, 14. Silver with the short squeeze, real quick. On a weekly, I don't remember what line this is that I had in. Again, just a general uptrend line. It's on a weekly. I don't even think there's enough on a monthly here. But if we go to the hourly, the wedge that we were in, we broke out to the short squeeze, and we were back down, dropped down 10%, I think the day before. No, today? Yeah, dropped down 10% today and just floated around. What did I see? I don't have a speculation on silver, you guys. We come back down and back test this. You could follow the trend. They could short squeeze it up just with the manipulation that's in the market. Do you really want to put your money in the gamble there? Bitcoin. Bitcoin's been doing some people some favors because they've all been stressing. Trend line. It was really hard to find one on this just massive up ramp. But once you found one and it created your blow off the top with no momentum whatsoever compared to this spike and this spike and this spike. Look where those are. Bow. 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 And absolutely nothing. Of course it dropped down. Everybody was waiting for it. Well, if you weren't, this is what you should have been looking at. This is even on the hourly. We've been catching this one all the way down. And I'm going to just show the volume bar. When you get a breakout of a trend line confirmed with volume, you buy as close to here as you can. Because of course you've seen you came down. Oh, you came down to back test, you back test, and you went off again. So you either buy it right before it takes off, or you buy it back down at the back test. But point is, breakout confirmed by a volume candle, and here we are, just kind of hitting our levels on our way back up. I don't see this one going all the way back up to 42,000. I just see this as unless it keeps ramping up. As of right now, we're on divergence hourly. It could burn, yeah. Let me see it hit 39,000 and burn through this 77 RSI, and I'll have faith in it. This one right here, it's never making it up there on the MACD. and that'll be a negative divergence. But long story short, just a nice little kickback rally. This probably happened at the same time as the GME squeeze, so just a lot of manipulation going on, everybody. I want you to keep that in mind. Where do you feel comfortable putting your money? Because that is really what it comes down to. Alright, this is the put to call ratio. When it is above the white lines, everybody is bearish. When it is below this line, everybody is bullish. That means there's more calls. More puts, the higher the number is. More calls, the lower the number is. And on the close of today, on the open of the day, nobody knew. We were indecision. At the end of this day, we are... Crap, what did I just say? Bullish. No, bearish. Sorry, I forgot. Alright, we are bearish at the end of this day. The last hour, you know, we sold off. It got everybody bearish. One thing I've read, and generally has been in my favor, is you act opposite of this one. So if the whole sentiment of the market is bearish, the market's gonna go up to collect all that money, if that makes sense. If there's more puts out there, obviously the market makers are gonna push that up into their favor. Okay? The manipulation part. I cannot say that word enough, and I'm not even sure if I'm allowed to say it. So, we'll just continue on with the nice VIX here. Beautiful VIX coming all the way back down to our support line. A lot of people use 22 as support. I've been going by 20.5, and really just this gap, 18.4, is another strong one going all the way back in time. So once we get really below this 22 line, that blow off the top that I expect and I talk about is more likely to happen. Seeing how we have another day for another point, a pullback, even, you know, the spike, the VIX coming up to retest this, not to, but to come back up, spike the market down, and then to even come back down to this 22 line. As we catch a bottom in the market, to ramp it up, to pass the gaps that we've got denied at twice now, and make everything look pretty glory, get all their money in so we can continue on. Same thing with the UVXY, another volatility one you can go by. This is where we got in our March highs. So as you can see, you can buy it at 10 and potentially get it all the way up. Almost, is that 100% or 1,000? Yeah, almost 1,000. Almost at 800%. It would have been 1,000, but you get what I'm saying. I'd love to go up 1,000. All right, so let's do this right here. The bonds. This is the one I'm waiting for to break out. It's calling for it right here. Let me remove this real quick. I have my close eye on it. I don't need my alarm, believe me. But the long downtrend. Look at this huge upwick. I want to show you guys my monthly chart in bonds. You know, we got this trend line, and this is actually where we are right now. This is our top, and this is just, you know, thrown off the wall. If you would have thrown this out there when you were coming into March, you would have been a fat cow. Just randomly, bow. And that one day, you can see it, that wick went all the way up there. But this has really been our medium and our lows line. They're coming into mix. But let's get back into our daily. what we are creating right now is what I called out a couple videos ago, which is a daily divergence. We could still run down to 148 in my opinion, but right here, this right here, we have just now created a divergent low. The daily, I can't, I can't point out any times. That was a divergent low. Right here, people called that and it ramped all the way to the top. So maybe we come down tomorrow and tag 147.55, 148. I said I would be a buyer at this divergent low. I have entered a small position, full disclaimer. And if it goes down here, I will add more. I mean, we're only at the bottom of the channel. I don't necessarily see it breaking through. If it busts through this, especially on a daily, I'll have a second opinion, but that's just something I'm pointing out for you guys. One more thing you guys definitely need to be watching is the dollar. The dollar has been uptrending, uptrending, and just catching it and ripping it. Slaying and killing. What's that old saying? Alright. Anyways, here we go. Ever since the low, this is now our trend line that we can draw in. These white lines are major support levels. More so 92 and 89. And that is where we're stuck in. You see that? We went all the way from this one to this one. That was in 14 to 15. I'm sure the market felt that. One thing I've been able to correlate is, yes, the dollar and the markets do react with one another. The market's been going up since the top here, and the dollar has been going down since. But one thing that I've been able to correlate is major tops and major bottoms in the dollar are, the opposite in the stock markets. So you can never pull up a chart even on a monthly or a weekly. Look at times like right here, 2001, 2000. I mean, major tops. When you hit your trend, we can even look at this. Go here to here. Back in here to catch up. As the dollar was going up here, market would have went down, called a break. Long point is, when you catch, dollar goes up, commodities cost more. When the commodities cost more, your economy needs more money to grow or to sustain. And if the dollar price goes up, you need essentially less dollars to get what you need, so everything would be valued less. You don't want that to happen. If you bought 100 onions at $10, they cost less because your dollar is going up. Now they're $9 a piece, and you only have $900 now instead of $1,000. So that is essentially what happens here, and that really doesn't happen until major tops or bottoms happen. Sorry, I get so long in the stories, but short story is we're catching this. This would be a good chart, a good buy, especially on a daily. If I showed this to one of my stock friends, they would ride this all the way up to this green line, 93. I don't necessarily see it getting there, But I see the dollar coming up to this 92, getting rejected, maybe coming in for a back test. If it breaks through, we'll find out then. But I just see it coming up to here, and this is a major level. Lots of activity going all the way through the chart, so be looking out for that one. I really got my confirmation after we got a candle close above this high. I haven't made a new low, just making higher lows, higher highs. That is a bull trend, and I believe we're just going to keep that up. Trend says we'll get there February. We'll just assume it said February 21st to March 1st. You get what I'm saying though, guys? Here, we'll even do it. Where'd my date go? It's not showing up. March 4th. Isn't that the anniversary date of you know what? Wouldn't that be funny? Anyways, watch the dollar on this one. This white line. This white line. Oil continuing to go up. I pointed that one out a couple videos ago. I think it was going sideways for a while. Oh, continue up drift. Up drift. Not really moving, not really going down. And here, last 2 days, we just caught a major bid. Kind of a divergence. I don't have anything on my stocks for the day. We got earnings coming out for tomorrow. Lots of earnings. We have all the sectors except technology, healthcare, consumer discretionary, and retail up today. Believe it or not, the ones that have been downtrending, energy, healthcare is the one that has been not downtrending, but has been having a rough week, to say that. So we'll just keep our eyes. We'll keep our eyes on those. Let me double check. Alright, everybody. I think that's it, honestly, with the market. With the way the market is acting right now, a lot of the longs that I am looking at, I'm not necessarily convinced with them yet. You can look into shorting some of the earnings coming out with the market. They're poising earnings. They're poising the prices up to earnings, and a lot of these tech stocks that I've seen, and even positive earnings, they've been dropping. It's really a prop. They push you up to make you look good, and even good earnings just sells. So it's all smoke and mirrors when the frick frack and frustrate crew come in and piss in your due. But alright, you guys, you have a good night. Good luck out there. Please like, subscribe, and leave a comment below. Please let me know. If you have a chart you want to show me, I would absolutely love anything you guys have to throw at me. And you have an idea, let me know. I'll look at it. I honestly have a notebook full of ideas. I don't want to throw them out here and have anybody going the wrong way. With the market able to turn on a dime, we could gap down tomorrow just because of the little bit of selling we saw. A little bit of selling causes a lot of panic selling, and the snowball effect turns into an avalanche. So just keep in mind your VIX is looking all right. Your dollar is still uptrending. If the market sells off, people generally run to bonds. If the bonds and the market both sell off at the same time, I don't know what to tell you. I don't think you can buy the DXY on things like Robinhood, so I don't know what to tell those people. But you guys have a good night, good luck, be safe, let me know.